Catastrophic, cataclysmic Trump's tariff threat has retailers sounding alarm. Already battered by the e-commerce revolution, traditional retail stores are bracing for another blow. New tariffs on $300 billion worth of Chinese imports that the Trump administration is threatening to impose. Retailers and analysts warn the impact will be disastrous for an industry already tormented by vacant storefronts and deserted malls. The reason, unlike even for healthy chains like Walmart and Costco, the new duties threaten the business formula that helped speed their rapid rise over the last few decades: import cheap products from Asia and sell them at rock-bottom prices. The government has on $250 billion worth of Chinese goods. President Trump, Mr. Trump's trade representative, will begin hearings on those proposed tariffs on Monday. With profit margins of 5 to 10%, Mr. Cohen said, sellers of apparel and accessories don't have much room to maneuver. Adding to the challenge, over 170 shoemakers and retailers called on Mr. Trump to halt the trade war with China, which supplies almost 70% of shoes sold in the United States. The industry cannot easily return shoe production to the United States, because labor costs are much higher here and there is little capacity for new production, said Matt Priest, chief executive of the Footwear Distributors and Retailers of America. Even New Balance, I do think it's catastrophic, Mr. Priest said. We are in the middle of, the impact will be greater on traditional retailers because they can't adjust prices as quickly as online retailers, Mr. Cohen said. This is going to by the end of 2019, announced closings could climb to 12,000 stores, Coresight estimated. The tariffs could also hurt the broader economy at a time when recession worries have moved to the forefront. The retail sector, Torsten Slok, chief economist at Deutsche Bank, estimated that if the duties did take effect and remained in place, they would add 0.4% to the inflation rate and reduce economic growth by the same amount over the next year. That may not sound like much, but consumer spending equals 70% of GDP, he added. It's economics. Mr. Trump could the tariffs as negotiations continue, a tactic he used in February after initial progress in the talks with China. But the uncertainty, my price targets are supposed to be 12-month targets, and now they're 12-tweet targets, Mr. Siegel said. He added that the retail industry at large is up in arms because they're not just fighting for their trade, they're fighting for their existence, Mr. Siegel said. Brian Goldner, chief executive of Hasbro, said the tariffs would be a setback for the toy industry just as it had begun to recover from the liquidation of Toys R Us last year. Hasbro, which makes toys and games like Play-Doh and Monopoly, said that it agreed to join other companies in testifying about the tariffs at a separate hearing the trade representative is expected to hold in coming weeks. About two-thirds. Still, China remains crucial as a supplier and customer. Hasbro's many companies declined to discuss the tariffs, fearful of being on the receiving end of a presidential Twitter post or other unwanted publicity. But on recent calls, many executives seemed hopeful that the duties would not come to pass, even as they described their efforts to mitigate the damage, leaving China, negotiating with vendors and figuring out new pricing strategies. Five Below, a chain that targets teens and tweens with merchandise that costs $5 or less.